Okay, insuring real property. This is going to be kind of dry. I studied insurance for years because I worked for an insurance company. I was their real estate manager. So while I was there, I went ahead and did insurance courses. But there's a lot that, when you're on your own, you're starting to buy insurance for your automobile, you're starting to buy homeowners, renters insurance, all that kind of stuff. Best thing you can do is find a good, friendly insurance agent to talk to that kind of can explain all this to you in real, simple, basic terms. Because there's a lot you can do to buy insurance properly, keep your costs down, but also to have protection that you need. Bless you. So what we're going to talk about is we're going to understand the terminology used in insurance contracts. We're going to explain what is an insurable interest, who can be considered an insured. We're going to describe the differences between an insurance agent and a broker. Hey, kind of like a real estate agent and a broker. We're going to explain the process of forming an insurance contract, key provisions of it. We'll talk about common types of property insurance. We're going to understand the different methods an insurance carrier can use to calculate the amount to be paid under a claim. We're going to talk about the duties of the insured and the insurer and discuss emerging issues that you're hearing about in law papers and things like that today. So insurance, it's a contract that transfers the risk of loss from one party to another in exchange for payment. So there's several things you can do when you face a risk. One thing you can do is you can avoid it. I don't want anything to do with it. I don't want to buy a house that has a swimming pool in it. I'm going to avoid the risk. I'm just not even going to enter into it. Oh, I am going to buy a house with a swimming pool in it, but I'm going to put gates all around my swimming pool. Oh, I'm going to buy a house with a swimming pool in it, but I'm going to make sure I carry good insurance to cover that. I'm going to shift that risk. I'm just going to buy the house and keep the swimming pool, and I'm just going to insure all of it so I can accept the entire risk and not do it. So those are the different kinds of things we can do to deal with risk. So parties, we have the insured and we have the insurer. We have premiums. Premiums are collected from a large pool of insureds, allowing the risk of loss to be spread to many insureds. The way insurance companies make their money is they collect your premium in advance. They invest your premium. Then when you have a claim, they take forever and a blue moon to settle with you, and then they finally pay your claim. But what they've been doing with you the entire time is they've been earning money on your premiums and the time it takes to pay you. I had to work for an insurance company a long time before I understood that whole piece of how insurance companies actually make money. And then there's policy limits that says, hey, I'm only going to pay 80% of the loss, or I'm only going to pay loss to X amount of dollars. How many of you ever watched the car shows on TV? And there's this thing called Grundy Insurance. Grundy Insurance carries insurance for old cars, collector cars. And one of the things Grundy does is he says he has this policy that lets you have an agreed to value. That says, we're not going to dicker around with what the car is worth, less depreciation, all that kind of stuff. You have this custom automobile. You decide it's a $3 million automobile, then you can buy insurance and call it a $3 million car. We don't care. But you're going to pay insurance on a $3 million car. So that's agreed to value. We have similar kinds of things like that with our real estate. But one of the things we should always do for our real estate is insure for replacement value. Replacement value means the house is totally destroyed. We have to replace it, everything. Foundation, ground up. That's the maximum amount of insurance that you can have on a house, or on a piece of real estate, would be total replacement value. Big difference that you insure for total replacement value versus what you think it's worth. Because what you think it's worth versus what it really costs to do something could be 50% of its value. Then if you actually have a claim and there's damage, the insurance company is going to come back and only pay you 50% of the lost value. So you need to make sure that when you're insuring and you're doing things, you make sure you understand what those policy limits are. Why is it so complex? Well, complex jargon, Different insurance carriers do not use the same policies. They have regulation and conflicting state laws. Guess what? Just like Ohio governs real estate, every state governs their own real estate, every state also governs insurance. It's a 50-state thing. So every insurance carrier has to have licenses and applications in all 50 states to be able to do business. It's a lot of paperwork, a lot of stuff they have to deal with. The McCarran-Ferguson Act of 1945 is a federal law that delegated regulation insurance industry to all the states. So each state has the ability to make insurance carriers include or exclude certain types of coverages. And we also have something called manuscript policies. It's a policy negotiated by the insurance carrier and the policy holder. And their manuscript policies are different, so they're custom written policies, depending upon how they do that. An insurable interest exists when a person would sustain a financial or other kind of loss if the property was lost or damaged. So who has an insurable interest? Buyers or sellers of real estate? So at the time you're selling real estate, there's an insurance provision in the real estate contract that says who's going to insure the property until it closes. Typically the seller is going to insure the property until it closes because the seller is not going to give the buyer possession until they've been to a closing. What happens if there's a loss after that contract is signed before you go to a closing? Who's going to be paid for that loss? This is all part of this contract that you'll see. Therefore, buyers and sellers both have what we call insurable interests. Owners of non-possessory real estate interests and holders of future estates have insurable interests. Persons holding a security interest have an insurable interest. Tenants who have agreed to insure the premises under terms of the lease have an insurable interest. And owners of a common interest have interest in real property. But if you are not associated with that piece of real estate, you just happen to walk on it, you're shopping on it, you're doing this, you're doing that, or you know somebody that knows it, you don't have what we call an insurable interest. Therefore, you can't be getting benefits from the insurance on that property. So that's what an insurable interest is going to do. It's going to allow you to have benefits. Extent of an insurable interest be limited to the extent of a person's interest in the insured property. A recovery for insurable interest. Insurable interest must exist for property insurance at the time of the loss. If the insured does not have an insurable interest in the property, the insured may not enforce a claim. So again, you've got to have an interest to be able to say, hey, I want to make a claim. You can buy insurance, but if you don't have an insurable interest, you don't get to make a claim. Who's the insured? The policy owner, and they have the power to cancel, modify, or renew the policy. So you're the owner if you're buying insurance for your home, your car, your property. The additional named insured. This is something we do as a commercial landlord. We want to be named additional insured on every single policy that our tenants carry, that our contractors and vendors carry. And we have some problems. There are certain companies we won't do business with because they won't name us an additional insured. Johnson Controls is one of those big companies today. They just bought this company called Tyco Grinnell. We used to do a lot of business with Tyco Grinnell. A lot of fire systems in our buildings were installed and monitored by a company called Tyco Grinnell. When Tyco Grinnell was bought by Johnson, they refused to follow our policies for JLL to be named additional insured. JLL is not doing business with them anymore. We can find other people to do the business. It's not a big deal. But we insist on being named the additional insured. So what does that mean? If I have a snow contractor, and they're clearing snow out, and I'm doing these contracts right now, that's why it's on top of my mind, they're clearing snow out, and somebody has a slip and fall on the property because the snow wasn't cleared properly. Who is that person going to sue?
Everybody.
But who's going to be covered? That person is going to sue me as the property owner, but the next thing I'm going to do is I'm going to make my incident report. My insurance company is going to go back and say, whoa, wait a minute. Let me see your snow removal contract. Let me see what your snow removal contract says. The snow removal contract says they're going to carry the insurance and I'm going to be named the additional insured. So my snow removal contractors come back to me and say, Joyce, what's a snow incident? Well, a snow incident is typically an inch or more of snow. Means you're going to start plowing. But if we have an icy rain, you're going to start salting right away. But you know what, contractor? I'm going to leave it up to you. And then I look at them and I say, and I'm going to leave it up to you. And they go, why? I said, because you're protecting me. It's how you conduct your business. You're the professional. You're doing what you think is necessary. I'm going to pay for it. If you clean multiple times or dump additional salt and everything, I'm going to pay for it. But you're taking on the responsibility to make sure all the insurance is covered. You're taking the responsibility as the vendor to take care of the property. You're stepping between me and that person that might slip and fall. You're protecting all of us. So I expect you as a professional to use your common sense. That's why I'm paying you as a professional to do this business. And they kind of get a little surprised, but that's the reality. I have a security company, guard security. Guess what? Something happens on the property at night while my guards are on duty, they're the first ones that are going to be taking care of it. They'll be named in the lawsuit, we'll be named, but they're going to cover us because we're named additionally insured. So that's the whole piece of this. Somebody trips and falls on your sidewalk in front of your house. Who's going to get sued? Homeowner. And is the homeowner responsible for that? Well, I'm going to carry the general liability coverage. It'll be up to my insurance carrier to say, wait a minute, that person was riding some kind of vehicle down the sidewalk that they never should have been on the sidewalk with, their own fault. The lady that fell in front of the property because she was walking and talking on her cell phone, wasn't paying attention to where the hell she was going, her fault, we're not going to cover it. Okay, I had a lady slip and fall last weekend. And I got a report, so I made the report to the insurance carrier. The lady called me yesterday. And I said, lady, my insurance carrier's been trying to get in touch with you. The adjuster's been trying to call and talk to you. I'm sorry, I work 10-hour days. You can only reach me on my cell phone. I can't have my cell phone at work, but if she texts me, I might be able to walk out and take the phone call. And the reason I'm calling you today is because my knee hurts. It feels like it's slipping. I said, lady, you need to go to the doctor. But you're going to cover it on your own insurance. I hope you have medical insurance. And then my insurance carrier is going to talk to you, and they're going to determine whether they're going to reimburse you or not. But I can't tell you that we're going to take care of your claim. I'm going to tell you to go seek medical attention. If you're in pain, lady, go seek medical attention. I can't help you out more than that. I don't know what the hell she was doing when she fell down. I know that where she fell, we just put a new epoxy coating on the floor, but we put sand in the epoxy, so it's not slippery. It's shiny, it looks pretty, but it's not a slippery floor. And we went out, when we found out that she fell, took pictures of it, inspected, didn't see any problems. Again, we don't know why she fell that day. But we do know that she bruised her knee. It'll be up to the insurance carrier to figure that out. And again, that's just falling on the property. We automatically get sued for that. The insurance carriers decide whether they're going to cover it or not. Insurance agents and brokers. Insurance is sold primarily through agents and brokers. An insurance agent is an agent of the insurance company, not the applicant. So when you buy insurance through, quote, your agent, if they sell for multiple companies, they really are an insurance broker. If they're an agent, they only write for that one company. And when you get advice from them, hopefully they're your friend and they're giving you good advice, but who do they really work for? They really work for the insurance company. I happen to have an insurance broker. She's been our family friend since my husband was in high school. She hates insurance companies. She hates to see them make money. She always tells me this is the best way to deal with this, Joyce. Pay the least amount of money, get the best policy coverage. But I hate insurance companies. But I make a hell of a lot of money doing this business, so she's been in it for years. She's second generation. And she's in her early 60s now and doesn't have kids that want to do the business. But she's been doing it a long time. She grew up in the industry. So she's an insurance broker. She can place insurance with a number of different carriers. She shops different companies for me to get me the best pricing. When I buy insurance, insurance agents have fiduciary duties. They act in the best interest of the insurance company, their employer. That's who they work for. If an agent acts negligently toward a person in the process of securing the insurance policy, those acts are attributable to the insurance company, so you can get recovery. Brokers own a fiduciary interest to act in the best interest of the insured. That's why I like working for my new friend working for me as my insurance broker, because she's acting in my best interest. Misrepresentations made by the broker are deemed to be misrepresentations of the applicant. I didn't give all the right information. I'm the applicant, basically. Insurance contract. Again, it's a contract. It's basic contract law, but it's a very difficult contract to read. I guarantee you, if you take an insurance contract to bed, you will be asleep before you get through the third page, because they are just very difficult to read. Application. Once completed, becomes part of the policy. The applicant is liable for any misrepresentation. So you might be trying to lie or make your way through trying to get a lower policy but if you're found out that you were lying, they may not cover you. The effective date, the date on which coverage begins. They can do a binder. It's a form of temporary insurance contract that provides coverage subject to terms and conditions as the insurance policy the carrier will eventually issue. So you can be bound. Okay, so when I buy a new car, I'm bound. Because I've had an insurance relationship with this company for so long, I'm bound when I buy that new car. I may take 2 days to report to my insurance agent I just bought that new car. But I already have coverage, basically, so I'm bound. Now, she has to submit the paperwork for that specific vehicle to have me covered on that specific vehicle. But I'm basically bound.
How long is that binder good for?
They would like you to know within a week. It's a reasonable period of time.
Sure.
Yeah, my husband and I just bought a replacement car for him. And we bought it, we went Friday to go buy it. By the time we got home, it was Saturday afternoon. We sent an email to our insurance agent. By the time she actually knew what the car was, had a VIN number and everything on it, was Monday. But we were bound Friday when we picked it up. Insurance contract, also known as insurance policy, sets forth the covered losses, exclusions from coverage. Covered losses, the unforeseen, unanticipated destruction, diminution, or loss of value. Triggers the duty of the insurance carrier to investigate and pay, and a covered loss is caused by a peril. So this is unanticipated. If there's something that's anticipated and something else happened, we're going to look at other reasons other than insurance for that. The insurance contract, again, separate forms of property insurance. You can have basic, which is also named risk. You can have broad coverage. You can have special coverage, such as all risk. And you can also have earthquake policies. Okay, we live on a fault line. Cincinnati's on a fault line. I pay $5 a year for earthquake insurance. I'm one of the only people I know that has earthquake insurance. But for $5 a year, that's a hell of a gamble. I'll pay that $5 because if my foundation cracks, they're going to take care of it. Never know when we might shake right here. Again, so those kind of coverages, ask your agent about what's it cost to get covered by these little things. If it's just a few dollars, go ahead and stack it in. It's worth it to have that kind of coverage. I also have flood insurance. I don't live in a floodplain. I don't live in an area that floods. I live in a high part of the neighborhood. Shit, if my house floods, everybody around me is literally underwater. It's going to be a problem. And my kids were worried a few years ago when somebody did die in the flood in our neighborhood because they went in the basement and died in the house. But I have flood insurance in case my toilets or my plumbing backs up. Again, that's just a few dollars a year, but that can do thousands of dollars worth of damage. And again, it's not an anticipated thing, it's unanticipated. But it's coverage that I can have. It's like doing my routine maintenance. I also want to have routine coverages. Exclusions. In most states, the insurer is free to select type of risk that it'll cover, and only liable for loss it defines within its own terms. Interpretation of ambiguities. If an insurance contract has ambiguities, it's going to rule against the insurance carrier because they write their own contracts. So if somebody can't figure out how to tell you what's in it, then they're going to rule against the carrier. Prohibited conduct by the insurer. State laws prohibit insurance carriers from providing coverage for intentional wrongdoing by the insured. Life insurance policy. You commit suicide. That's not going to be covered. They're going to investigate the cause of death. If they find it's suicide, you won't be covered. Your family will not benefit from that. Same kind of thing for your house. Years ago, my cousin lives in this little neighborhood in Indiana. They blew up the house because this couple was trying to receive insurance. They were major in debt. They blew up, not only did they blow up their house, they blew up 16 houses in the neighborhood were blown up. 16 houses. I should show you the picture in Indiana. It looks like it's southeast of the city of Indianapolis. And this was a few years ago. So what happened is these people were out of town. They blew up their house. They just didn't understand what they were working with the chemicals. They literally blew a crater into the earth, damaged 16 houses around them. My cousin lived 2 doors down. Her house was, it literally shook it off the foundation. They weren't allowed in their house for days after this happened. All their kitchen cabinets and everything fell off the walls. The house between them and the house that blew a crater, and that house caught fire and 2 people died in the fire. So these people, 3 people were in court for a long time. My cousin ended up living in a temporary house for a year, and now she's in a permanent house, beautiful new house. But then she ended up selling a lot that she was in. They don't want to move back to that neighborhood. But she was one of the only houses in that lot that had a basement. So she compacted the soil, got it all filled in properly, but she forgot to get the compaction report from the contractors when they did it. She came back years later and had to pay a couple $1,000s to have another compaction report done. But she sold her lot finally. It took her a few years after this whole loss to finally sell the lot, to really, truly get whole and get recovered. Fortunately, nobody in their family got hurt or killed. Their cat was gone for days. They did find it later. The cat was okay, but just they couldn't not even go back in their house. Somebody had to get all of their belongings and put it in a school somewhere where they could go through their own stuff. Just crazy kind of stuff. So people do all kinds of stuff to get paid, to try to recoup losses. Now, who paid for that loss? I honestly never asked her whether it was her insurance company or whether it was the insurance company of the people that blew up the house, because what they did was a criminal activity. So I think it was her insurance company, because their criminal activity would have violated their policy. Yeah. Lots of money. The house was totally destroyed. Business insurance. We have commercial general liability for bodily injury, property damages, and personal injury. We have seller warranty policies that guarantees representation made by sellers in real estate transaction contracts. Everybody will tell you today, when you're selling a house, to get the seller's warranty. It's $400 or $500, I think, something like that, but it covers all kinds of repairs for the house, for the appliances, all kinds of stupid stuff. And I had no idea how much stuff it covered until my son, when he bought a house a few years ago, got one of these policies, and he's made a few claims and had things covered. Just stupid little things that happen, but he was able to go through the homeowner's policy and get it covered. Huh? Yeah. So seller warranty.
Only lasts like a year, right?
Typically 1 year, but then he renewed it. Yeah, and it doesn't cost that much to renew it. But for the seller to buy it, it's like $400 or something.
The seller would buy that?
The seller buys it because they're giving a warranty with their house to say their house is okay.
But the buyer can buy one too.
Sure.
Is it more expensive for the buyer?
But most of the time, the real estate agent will have the seller automatically have it as part of the listing. That's a good idea. My assistant's getting ready to move down to Alabama, and so she's trying to sell her house up here, and that was one of the first things that her listing agent said, okay, sign up for your seller's policy. Okay, we'll do that. She's trying to sell a house that's over $300,000. Yeah, we'll sign up for a $400 seller's policy. Not a hard sell. Errors and omissions policies for brokers. Covers claims arising out of the acts or omissions or personal injury caused by the failure to render professional services. As a broker in Ohio, I tell the state of Ohio that I'm going to have errors and omissions of insurance. My license is with a company called JLL. JLL has errors and omissions in Ohio. And in Kentucky, as soon as I got my Kentucky broker's license, I had to pay the state another $100 for errors and omissions insurance. The state forces every insured to buy through their state policy. So every state functions differently on how they do that. So I have E&O insurance in Kentucky too, but it's automatically done as part of my renewal policy, as part of getting a broker's license.
Do you like rental, like a broker, not rental, but does like a real estate brokerage usually work that in, so they take that out from you if you're
Yes, if you're an agent, you may have to pay a couple $100 a year for your share of the errors and omissions policy. They will tell you up front, when you become licensed with a company, they'll tell you up front what your share cost of that is. Like I said, in Kentucky, it's like $100 a year. It's not a lot, and that's me as the broker. So agent is even less because the broker covers what their agent does. The broker's responsible for everything their agents do. So when you all work for brokers, they're responsible for your actions.
Do you have to pay like a desk fee too?
Some companies make you pay a desk fee. What's a desk fee? A desk fee is your share of your office costs. They have administrative people. They have office equipment. They pay rent. They pay for office furniture. That's what a desk fee is. It may be part of this leasing for sale signs that they buy for you when you get listings. So desk costs can be a lot of different things. But yes, different companies have policy on desktop costs too. Photographer could be in there. Yeah, it's all different kinds of what they do. Yeah, it costs a lot of money to become an agent. Common types of property insurance. So we have fire insurance, homeowners, condominium policies, renters insurance, flood insurance, earthquake insurance, title insurance, builder's risk insurance. Okay, that's only if you're building. Terrorism insurance. Oh, this was a big thing right after 9/11. All these big buildings had to have terrorism insurance in their mortgages, and they couldn't get them. They couldn't get policies. So the federal government had to step in and start in the insurance business to get these terrorism policies in place for mortgage companies. Because right after 9/11 happened, every big building thought they were going to get blown up. So everybody was saying you got to have terrorism insurance. We still have terrorism insurance, but it's not to the same impact that it was back in 9/11. An umbrella policy is a policy that you take out personally that covers more than just your general liability and stuff. So my husband took out an umbrella policy when he was a teacher. He taught junior high school and high school for a while, and they said as a teacher you should have an umbrella policy because you could be sued for doing something wrong. So he took out an umbrella policy. I just realized this year I've had an umbrella policy. He hadn't been teaching for 7 or 8 years, and I've had an umbrella policy. So I called my agent and said, you know what? I don't think I need that anymore. So I'll save a little bit of money every year. It wasn't huge money, but I don't need it anymore. But what was nice about it is the umbrella, I have $1 million, $2 million coverage, but the umbrella was another couple $1 million on top of everything. What will the insurance carrier pay? Actual cash value determined by subtracting the item's depreciation from its replacement cost. So this is why actual cash value, the whole thing about Grundy, they say if you say it's worth $3 million, we say it's worth $3 million, and we don't talk about depreciation or anything. But in homeowners, when we talk about it, we have depreciation. So that's why we want replacement costs. The insurer pays the amount required to replace the damaged property up to the amount of policy. So what are the policy limits? Extended replacement costs. Insurer will pay for replacement costs up to a specified percentage above the policy limits. So you want an extended plan? That's fine. They'll sell it to you. You'll pay a little more for it, but you can get it. Guaranteed replacement costs. Insurer will pay the full cost of repairing and replacing the damaged or destroyed structure regardless of policy limits. Again, they will do this, but you'll pay a little more for that policy. Building code upgrades. Endorsement to provide additional reimbursement costs required to bring structure up to current building codes or ordinance requirements. Why would you need this? If you have an older structure and there's a catastrophic damage to the older structure, and you have all these other things that talked about guaranteed replacement costs and everything, but this whole thing about building code upgrades could be major. So when you have an older structure, you want to also look at building code upgrades. Because anytime there's a damage like that and they want to require an electrical permit or a building permit to do any repairs, they want to bring everything up to current code. So anything you have that's older, you want to look at that. Duty to notify. The insured is required to provide notice of a claim or covered loss as soon as practical. So that lady fell down Saturday. I came in the office Monday. One of the first things I did is I filled out a claim form and sent it to the insurance company. They want me to tell them right away when we have issues. Duty to cooperate. I have the duty to cooperate in the investigation, settlement, or defense of the claim of a lawsuit. Yeah, they can call on me to testify or whatever, what's condition stuff. One of the first things they asked me to do is take a picture. So that's one first thing I did when I took a picture of what was the situation. Duty to mitigate. Duty to mitigate requires the insured to take steps to avoid incurring expenses or other necessary costs. Part of my building was destroyed by a fire. It would be my job. The fire department will come in and put a tarp over the part that's destroyed by the fire. They'll tarp. They'll do that for you. But if there's other areas that need protection from rain or snow, it would be my job as the insured, as the property manager, to make sure I do as much as I can to bring in more tarp, to do more than necessary so I don't have more losses. Part of our job as a property manager, we're the first to get called after the fire department, but we get called before the insurance company. We're there on scene if there's a damage or claim, and it's our job to try to board up, do whatever we can to protect the property as much as we possibly can that day, that time of the policy problem. So I actually have a contract with a company like a Serval company to come in and do damage repair. It's called Belfort. So I have a contract with Belfort, all for my properties. So if I have any of these catastrophic damages, I can call Belfort. They'll come in. They'll send a crew in. No matter what time, day and night, whatever property, they'll send a crew in to come in and do the board up, whatever. They'll do water removal. They'll do drying out of property. They'll do all kinds of things to start the whole process of getting recovery done. But they'll also help me make sure everything's covered and protected as much as possible. Duty of good faith and fair dealing, the insurer has to take care of. Implied in their contract, they're going to take care of things. The insured's response to a claim, they may accept, demand, require additional information, deny coverage, or provide defense. They have reservation of rights. They also have the right to investigate, and they will investigate if it's a big loss. The insurance duty to indemnify, they have to pay covered claims at the limits of policy. They have to defend. They have to settle claims, and they should never act in bad faith. And that is it for basic insurance. Any questions?
I just want to make sure, you said the insurance agent has a fiduciary duty to act in the best interest of the insurance company.
Correct.
And the insurance broker has that reversed. The fiduciary duty is to the insurer.
The insured.
Insured.
Their customer.
Yeah,
Their customer. So a broker sells insurance for many different companies, but they're giving advice and looking out for the best interest of their customer. Whereas an insurance agent is an employee of the insurance company. If you're an employee of somebody, who's your best interest going to be?
Yeah.
Your employer.
But an individual person can buy insurance from either an insurance agent or an insurance.
We can buy insurance from anybody. Go online. But when you go online and buy Geico insurance, you're buying from the machine. The machine works for the company. The machine. And if you actually get lucky and talk to somebody, that person that you're talking to on the other end is still working for the company.
Yeah.
They're going to try to sell you all kinds of stuff if they're good.
Yeah.
They'll keep trying to upsell you as much as they possibly can. Whose interest are they working for? You can listen to their advice, but understand that they're working for the insurance company.